Hey everyone, Raytheon reported second quarter 2023 earnings results. So in this video, I'm going to review some key insights from those earnings results you're not going to want to miss. I'm also going to update my buy recommendation of Raytheon stock. Coming into these results, I had Raytheon rated as a buy. You're going to want to tune in to see if I'm changing that recommendation. So let's get right into it, starting with total revenue of 18.3 billion was up by 12% year over year. Adjusted earnings per share of $1.29 was up 11% year over year. And here's my favorite part about Raytheon's business is that it boasts a backlog of $185 billion. These are orders that customers have already placed with Raytheon, and it's just a matter of Raytheon producing, manufacturing, and delivering these items to customers. This is not unlike what you see from Lockheed Martin or maybe even like a Boeing or an Airbus, right? They have strong demand heading out years into the future, which gives investors insight into what future years' revenue is going to look like. However, unfortunately, its Pratt & Whitney segment determined that a rare condition in powder metal used to manufacture certain engine parts will require accelerated fleet inspection. Now, management said this did not impact the current earnings results, but it may have a significant impact in future quarters. And this is primarily why Raytheon's stock price was down roughly 10% on the day it made this announcement, despite the fact that it beat and raised earnings forecast for the rest of the year. And speaking of the raising forecast, in 2023, Raytheon now expects 1 billion more in revenue. It raised its guidance to 73.5 billion at the midpoint for the year. It also increased its earnings per share outlook by 5 cents to $5 at the midpoint. So, overall, if you exclude this news from Pratt & Whitney, the company had an excellent quarter. The news from Pratt & Whitney is why the stock price was down. Now, to update my recommendation for Raytheon stock, I am keeping the stock as a buy, although I am moving it slightly downward closer to a hold/buy on the borderline because of the uncertainty about this news about the future inspections. I want to know more about this until I feel better. I'm being a little bit more cautious about the stock, which I will say I had it rated as a buy going in because I really like the business. The stock was not expensive. The company has a strong backlog of orders years into the future. So I'm just placing a slight cautionary flag because of this announcement from Pratt & Whitney. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.